Did you know that paying only the minimum on your credit card bill can lead to sky-high interest rates, sometimes exceeding 300% per year? This reality can turn a useful financial tool into a long-term debt trap. But don't worry. In this guide, you'll discover proven tips to make your credit card work for you rather than against you, avoiding common financial pitfalls and making the most of all the benefits without the stress. What is a credit card and how does it work? First of all, let's understand what a credit card actually is. Essentially, it's a payment method that allows you to make purchases with a deferred payment, like a short-term loan. The problem arises when you cannot pay off the total bill by the due date, which can lead to revolving credit use where interest rates are extremely high. In some countries, these rates can surpass 300% annually. Why are these interest rates so high? Various factors contribute to this, such as the risk of default and administrative costs, which make credit card interest rates higher than other forms of credit. To avoid falling into this cycle, let's look at some strategies to use your card responsibly and avoid these heavy charges. 1. Know your credit limit and use it moderately. For many people, a credit limit feels like an extension of their income, but this is a common mistake. Remember, this money is borrowed, not extra income. To keep your finances in check, set a personal spending limit below what the bank offers. Tip: set a spending limit that fits your monthly budget, ensuring that you don't commit to more than you can afford to pay when the bill arrives. 2. Pay your bill in full and avoid revolving credit. Whenever possible, pay your entire credit card bill. This prevents the need for revolving credit, where the highest interest rates are applied. Making only the minimum payment covers just part of the outstanding balance, leaving the rest to accrue interest. Tip: if for any reason you can't pay the full amount, contact your bank to try to negotiate a lower interest rate or special payment terms. 3. Choose a due date that matches your cash flow. Choosing a due date that aligns with your monthly cash flow can greatly help you stay organized financially. Many people prefer a date close to their payday to ensure they always have funds available to pay off the bill. Tip: aligning your billing date with your income flow makes payments easier, helping you avoid extra charges for late payments. 4. Use your card for planned purchases and prioritize essential expenses. One of the common pitfalls of credit card use is impulse buying. Unplanned purchases can quickly bust your budget, making it difficult to pay the full amount. Use your card only for essential or planned expenses, and avoid using it for small daily purchases that can add up over the month. Tip: plan your credit card purchases in advance, prioritizing expenses that won't strain your monthly budget. 5. Take advantage of rewards and cashback programs, without overspending. Many credit cards offer rewards programs, cashback, or discounts at partner stores. When used strategically, these benefits can reduce costs. However, it's important to remember not to increase your spending just to accumulate points. Tip: choose a card that offers rewards aligned with your spending habits, and maximize your cashback or points without overspending. 6. Avoid installment payments and long-term debt. While installment payments can be appealing for larger purchases, they can lead to a consistently high bill that's hard to pay off. Avoid installments whenever possible and opt to pay in full to keep your budget under control. Tip: whenever possible, pay in full to avoid ongoing installments that could tie up your monthly budget. 7. Control online purchases and stick to your budget. With the rise of online shopping, it's easy to lose track of credit card spending. To avoid unpleasant surprises at the end of the month, include these expenses in your budget and monitor your card purchases closely. Tip: use financial tracking apps to keep an eye on both online and offline purchases, making it easier to stay within your budget. 8. Negotiate your card's interest rates with the bank. If you've already accumulated significant credit card debt, one solution may be to negotiate with the bank to reduce the interest rate, or consider a personal loan with lower interest to pay off the debt. Many banks are open to negotiation to avoid defaults. Tip: reach out to your bank to negotiate lower rates, and consider alternative credit options with lower interest, such as personal loans. 9. Use financial management apps and tools. There are many apps available to help organize finances and monitor credit card spending. Using these tools provides a clearer view of your spending and helps prevent excessive debt. Tip: use apps like Mint, PocketGuard, or a NAB to manage your budget and gain better control over your credit card expenses. 10. Understand your credit card fees and interest rates. To make informed decisions about credit card use, it's essential to understand the fees charged by your financial institution, including revolving credit interest, late fees, and other charges. Knowing these figures helps you avoid surprises and make better decisions, and even compare different cards to find the best one for your needs. Tip: regularly review your card's terms and keep an eye on the fee structure. Comparing different cards can often reveal options with more favorable rates. A credit card can be a great asset for managing finances, but careless use can lead to debt and high interest charges that damage financial health. By following these strategies, you can avoid predatory interest rates, control your budget, and safely take advantage of the benefits a credit card offers. Avoid revolving credit, monitor your spending, and turn your credit card into a financial tool rather than a source of stress. Did you find these tips helpful? Share this guide with friends and family so everyone can learn to use their credit card wisely. For more personal finance tips, subscribe to our newsletter and receive exclusive content straight to your inbox.